So good afternoon, everyone, and thank you to my panel for agreeing to talk with us about their innovations. So to my far, is it left? Okay, far left is Glenn from Empower, the CEO. To my nearest left is Mao Mukria from Hodi. I got that one right. And then Mike Holler, right in the middle, from Plotify, which is very nicely termed because of the interesting work that you guys do, right? So we're going to talk about PropTech, and that's just technology linked up to property, right? And how that plays out in many use cases, whether it is crowdfunding, property listing, management of property, and how that actually helps with reducing the time for customers to transact, lowering risk, as well as lowering the price and the cost of doing business. So, without any further ado, Glenn, let's start with you. And maybe you tell us a little bit about what Empower does.
Sure, thanks, Mfundo. So yeah, so we're really trying to address the elephant in the room that's been discussed about throughout this whole couple of days, and that is how do we address the informal market. So the starting point is the recognition that despite, which is always challenging at a mortgage conference, to state that the mortgage is not necessarily fit for purpose for the vast majority of the African market. We know that the research shows that more than 85% of income is informal. Therefore, how do we support that sector of the market and enable them access to housing finance? Because right now we have a mortgage on one side, we have micro lending on the other, which is extremely expensive. Well, both are expensive, but the one is extremely expensive. And there's nothing that sits in the middle that addresses that. And so our ecosystem that we're developing, the platform that we're developing, seeks to address that in a way that it can address that 85% of the market.
Thanks, Glenn. And then, Mike, do you want to just give us a sense of what it is that you guys do?
Do you mind if I stand up? After last night's bus ride and lunch, I might fall asleep if I don't stand up. So my name is Michael Waller. I run a home loans company. Well, I'm a founder of a home loans company based in Zambia. So I take offense that you say mortgages are not fit for purpose. No, I'm just teasing. Actually, what I'm about to say in a way agrees with you. So I've worked at Zambian Home Loans and built it up for the last 10 years. And we have an incredible amount of experience of what it takes to run a mortgage company in an extreme environment. And by extreme environment, I mean a place where interest rates shoot around from as low as 10 to sometimes into the 40s. And in a place where there's very few title deeds, only 10% of the land in Zambia is actually on title. I tend to agree with you. All of the talk we heard yesterday around mortgages and secondary market of mortgages, it's kind of wishful thinking for some of our markets. I mean, I recognize that many of our markets are ahead of Zambia, for example, but all of our markets face some pretty fundamental issues around access to title, ability to foreclose, and affordability is the big thing for that stops people to access mortgages. So about a year ago, despite having run Zambian Home Loans for 10 years, reasonably successfully and profitably, I woke up one night and I decided that I wanted to try a new business and I wanted to look at this problem of affordability and funding people from a slightly different perspective. And I started a company called Plotify, which is what I'd like to talk a little bit about today. And Plotify is a business which essentially helps developers to write payment plans. So we give them software which allows them to sell their plots and housing units on deferred payment plans, which makes it more affordable for customers to buy those units. It means the developers are no longer reliant on the bank offtake, which is in many countries not there anyway. And then what we do as Plotify is we can see the data that's coming in from those receivables on that system, and we then step in to buy those receivables. So we act as a cash flow solution for those developers, but allow them to sell the property more affordably and grow their market.
Thank you. And Mao, do you want to tell us a little bit about what HODI does?
So what HODI does is our main issue. What we're trying to solve was an affordable investment product. So what we do is we democratize real estate investment and provide an affordable digital asset backed by real estate and government securities that grows in value over time. This allows people to save, access affordable credit, and grow their wealth.
Thank you. Glenn, let's take it back to you and just talk about, so all of these innovations that we've termed PropTechs, right? How do we scale them expeditiously, especially in the context of Africa?
I think the greatest challenge with innovation is that we talk about it, and yet we actually have no idea how to integrate it or how to assess it. So when, for example, all the time, every time we see it up, we need ways to address the informal market. We need ways to do that. When we talk about it, but again, the institutions that are structured to support this or are looking for such innovations have no idea how to assess the innovation. So they have no idea actually of what that innovation could or should look like, or what it's addressing, or how to actually measure what it is that we're saying. So there's an institutional challenge to that. And so part of that, almost to a follow-up to the previous presentation around the PPPs, is that there is a huge amount of power in the people. And people start smaller projects. And the issue around innovation, and the tech sector has been very good at this. We used to develop in big projects and start off with big, and needs analysis and go through all that kind of stuff. And now it's about MVPs. Put out a minimum viable product, test it, learn fast, build on success, and scale rapidly. But we have no infrastructure to support that in this environment. And I think that's the challenge. So we constantly try in this top-down, which requires huge investments, big projects for people to get out of bed. That DFIs won't get out of bed for less than $50 million. Need big projects, so it's big players. So we keep getting the same results. So the fundamental change, I think, in what we need is support for these initiatives on the ground. I mean, that's why we called our company Empower, because it's around taking what's working in the places where it's working and supporting that. How do we support that? How do we create tools to support that? How do we get capital towards that? How do we get the payment processes and the data back from that in order so that we can scale it, leverage it, and move quickly in terms of really growing that scale and then learning and expanding that process?
Thanks, Glenn. And I guess iterations are very important in making sure that we find solutions slowly, learn, iterate, and so on, and deliver really powerful stuff that actually makes a difference on the ground.
We can learn very quickly at relatively low, very low cost. We've just got to be able to take that risk. And the problem is we're never prepared to take a risk for a small amount. That's what we actually need to be able to do, is take that risk, use that as learning fees, school fees, and then take that learning and move on to to scale it. That's how the tech sector works, and that's how we can work in the sector in order to create solutions around processes, because people find solutions.
100%. Mao, you guys at Howdy, how are you dealing with the question of investment and access to finance?
So what we did is we created our flagship product is called the Affordable Key to Real Estate, ACRE in short. So an ACRE is, again, digital asset backed by real estate and government securities that's predictable, and it grows at a value of about 20% per annum. So to answer your question, this makes it easier for, credit providers to provide credit using the ACRE as the collateral, rather than going through your monthly income or your credit history.
Right. And then, Mike, I guess for you guys, your solution is looking at developers. How do you then take PropTech to solve for the dev finance issues in the African context as well?
So in our instance, we've given some tech to these developers, and that gives us an amazing window into their world. So previously a developer, or in general terms, a developer is a very opaque thing. No one quite knows what their sales pipeline is. No one knows what their balance sheet is. No one knows what their receivables are like. So our system is not rocket science. It's very basic tech. One of the things I've learned is that developers don't want full banking suites. They don't want big receivables platforms. They want a very simple platform which helps them collect their money from their receivables. So we've taken something from the microfinance world and we've adapted it to that. But the key is that we've got visibility into the developers. So on our platform, it's early days, but we've got about $3 or $4 million worth of receivables. And we could sit here, we can go through those receivables and we can see which ones are performing. So we can see that Mr. XYZ is fully up to date on his payments, but someone else is not. And that gives us the power to buy the receivables that we want. And in the long run, the impact of that on the developer is that they're going to think twice before issuing a payment plan to someone who is a poor credit, because they realize they're not going to get to recycle their cash. So there's a bunch of sort of credit benefits and tightening up that we see flowing from this. But as I say, it's early days and we are looking for like-minded supporters to come and get involved with us.
Thanks. And then maybe just to wrap it up, Mao, how do you think that you guys can create a lifetime value for particularly tenants?
Very good one. So how Hoodie works is we take large rental properties, tokenize them, and sell these tokens to members of the public. Yeah, again, the tokens are acres. So what it allows people to do is they can invest in the property they live in, meaning that their rental payments act as their savings plan. So every time they pay rent, it adds value to the acre. So you actually create a sort of lifetime value where they're moving from, their studio apartment to their 1-bed to their 2-bed. So every rental payment is a savings.
Great stuff. Kersia is looking at me very funny. I could feel your eyes on me, Kersia. So we're going to wrap it up. And just, Glenn, I'm looking at your comment, and I'd like you to just comment around how do you think policy should be catching up to technology, which is always the case, right? As well as the market. So policy generally follows what has happened already, and what do you think should be happening to, and I'm going to be very controversial and say empower PropTechs?
I think, to be honest, it's around staying out of the way with visibility. It's as simple as that. It's around, we are trying things that may or may not work, but ostensibly from a legislative perspective will have a profound impact on the economy and on affordable housing. We're not trying to dodge anything or do anything, so work with us. So enable us to do that, enable us to go that route to learn and to do that, and part of the process of the policy is for the policy to also learn as we go and do that. So it's around building that as we go. So a huge part of that is exactly that, the whole pipeline, the visibility of that. Through the tech, we're actually making it more visible. We're making the informal formal, we're making the invisible visible. That's what policymakers are wanting. That's what we're able to actually do. Therefore, that should be supported. Therefore, the processes should be open to that, and let's work together to make that happen.
Yeah, no, thanks. And then, Mike, maybe just for you, I'd like to understand what you think about what the industry for PropTechs should be doing to get more market acceptance and adoption from end users, both end users and developers, I guess.
I'm sorry, I don't know how to answer that. I've been around the block and I've tried to raise money over many, now decades in Africa, and I've realized that raising money is an art. It's a hit and miss affair, and I don't think that there are really single lessons that you can tell to people. It's raising money for a startup or a new financing business or a prop tech business is you've got to be crafty, you've got to bring in partners, you've got to, by hook or by crook, you've got to find enough value to entice people to come in. It's a myth that there's easy money out there with venture capital who's just waiting to back this great idea. I've never found it in 20 years of looking for it. So I think I'm going to respectfully dodge that question.
There are a couple of politicians, so I'm not going to say that you answered it like a politician. I didn't say it. And then the same question to you. What do you think we can do in the sector to get more market acceptance?
For the end user, right? I think it's packaging and communication. You know, I'll give one example. A really good one in Kenya is M-Pesa. We weren't told this is XYZ technology that does this and this and this. It was as simple, you can just send your mom money up country. It was as simple as that. And that's what we need to do for the end user, because for them, they're not really interested in the technology, all the hoo-ha about it. They're just about, what does it do for me? How will it benefit me? Put your money here, it grows at this amount, you can take a loan, you can sell, you can make money. You know, package it as simple as possible.
100%. Look, folks, Kirsty, I'm looking to you to think, to see whether we could, got like 5 minutes. Did I make up some time? We're an efficient bank, FNB, very efficient. Very efficient. Okay, we're going to open up two questions. Yeah, for my panel, please don't ask me any questions. I was just the guy who was forced to wear a suit today. Okay, cool. Let's have 2 questions from the panel.
Questions for the panel? Just up here. Yes, Sita.
I was about to say you guys were very efficient.
There you go. Go.
To Mike, how did you adapt a microfinance software to suit lending to developers? I'd just be really curious what things you're trying to collect and, yeah.
Sure. So if you think about what developers do when they sell a property on a deferred payment plan, basically it's just a receivable. So they write a contract. You can call it what you like. It could be an installment agreement. It could be you can call it what you like, but it's a receivable. So, and that receivable typically accrues interest. It's got monthly payments. It needs a statement like a loan. And essentially, if you could substitute the word mortgage with receivable, so that these systems are essentially fungible. It doesn't take a huge amount of development to modify them. And one of my little learnings of the last year in running this business is that developers are not bankers. So they want a very simple system to use. They want to know that when they put that receivable on the platform, it's just basic. So that's kind of where I've invested my time in making it easy for them to onboard new customers. And as I said, it's not rocket science. What is difficult, though, is perhaps more to Glenn's point, is getting funders to come in and get interested and excited about funding these receivables and finding that risk capital, people who are interested in exploring, and in my opinion, a relatively low-risk property-backed receivable. But the point is it's new, so it requires a funder to step up and just think a little bit differently. The rewards from that are enormous because the scale of being able to fund into developers on a safer basis the scale is there. So that's perhaps the biggest challenge we face so far.
One more.
Yeah. I'm from the Central Bank of Tanzania. At the moment, we are having a desk or department which is handling financial technology innovations. What I'm trying to raise to you guys, we have alternative credit scoring on which fintech has a duty to play in terms of finding or forging another alternative to assess creditworthiness of the borrower. So for you guys there, what sort of initiatives do you think will be aligned to fintech in terms of uptaking the housing finance and using the fintech as alternative credit scoring? Thank you.
On that one, what I would say is, from our point of view, what we're trying to create is create an ecosystem of collateral. Because a lot of people, the problem with building wealth these days is it requires servicing. Every month you have to pay a mortgage, every month you have to put into your savings plan, your SACCO, everything like that. So what the ACRE does, it provides that collateral. Because again, there's an underlying asset, it generates income, and this income is invested in government securities, like your, I guess, Tanzanian government bonds. So this is backed by an underlying asset and the government. So it allows credit providers to be like, okay, cool, I can give you money. Your collateral is good, without having to go into your whole credit score, whether your monthly income, etc.
Right.
Thank you. Thank you very much. I think there's so much more to talk about and to understand. We've just prepared a profile of Hodi, which is going to be available on our website, I think, any minute now, or is already, might already be there, which is an interview with Mao about the business and about how he sees the prop tech industry. It's part of a number of interviews that we've done with various prop tech entrepreneurs. So do take a look at that. We'd love to write about Plotify and Empower as well in that space. It's just interviews with the founders. But thank you very much. Thank you. And here's our alarm.